What a terrible, 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 terrible week for Deliveroo, man. I can't even look you guys in the eye without wearing these glasses right now. Because looking at the week Deliveroo have had, failed IPO, you saw the headlines. You saw the headlines I just posted. Like, it's not looking good, but let's make things a little bit worse, I guess. Why not? So, first of all, I'm going to take these off. These are actually prescription sunglasses. I didn't even know you could get these until I got them, whenever I got them. I see guys with like transition lenses and all that, but I was like, you know what? Transition, I don't think that's for me. Let me just get 2 sets of glasses and call it a day. But anyway, with that nonsense out of the way, this video, if you haven't already guessed from the title, I'm going to be talking to you about why me personally, why I didn't buy any Deliveroo shares in this IPO. I saw it, I spoke to my friends about it. I know a bunch of guys who did buy in for the initial price of like £3.90, but let's talk about why I didn't do it. And I guess why loads of other people also didn't seem to do it, hence why Deliveroo aren't doing so well this week. I'm currently recording this as Friday, so it's been about 2 or 3 days since the IPO. And yeah, let me check. Before I go on, let me actually check the current market price. It's on LSE, the London Stock Exchange. The ticker is ROO, R-O-O. Currently at £2.82 or 282 GBX, which is in pennies. So that's a decent 30% drop from the peak. And yeah, let's figure out what's going on here. But let me talk from my perspective. So before I even go into this any further, obviously all of you guys know that watch my videos, I'm not a financial advisor. I invest a little bit personally myself, but my portfolio's below. I mean, actually no, I put a video out explaining my portfolio, so you know how much money I've got invested, but it's not a lot. It's not a lot relative to what these big guys are doing. So what I'm about to say is by no means to be taken as like objective facts. But I've done my own research. I looked into Deliveroo myself, and I thought I can't invest based on these things. I think these are important things that everyone, a lot of other investors are probably thinking about as well. But yeah, this is all my opinion. This is all for entertainment purposes only. But yeah, let's get into it. So I guess before we get into the proper technical stuff, let's talk first about what is Deliveroo and what is this whole IPO about. So Deliveroo, for anyone who's like not in the UK, who've never heard of it, they're effectively just a fast food, like a delivery service, basically the same as like DoorDash, Just Eat, Uber Eats, all these different companies that just deliver food to you. Deliveroo is another one of those. There's no need to over-explain that. An IPO, the initial public offering, is basically when a private company or a startup goes public. There are several ways they can do that. 2020 was big for SPACs, the special purpose acquisition companies. Those are companies that are already public and they just exist to merge with private companies and make them public by default. An IPO is kind of, well, it's actually not similar to that at all. Basically, when a company IPOs, they have all the private shareholders, and then they just add, they release more shares, but they release it on the public market, and all those private investors have the opportunity to sell their stocks on it's called a Series B type of stuff. And it's like, I'm not going to explain IPOs at length in this video. This is more just to give people an understanding of what's going on. And essentially, as I kind of explained, this is Deliveroo. They used to be private. They were a startup for like the last 4 years. Not a startup, I guess, but like they've been private. They started up recently. They've been private for a little while. And I guess in an attempt to get more money in, increase their funding, they went public through the means of an IPO. And that's kind of where the story starts. So 2020, and to be fair, leading up to last year as well, and also bits in this year, has been so big. I was telling all my friends the one reason, the main reason why I wasn't investing in Deliveroo was because of Uber. And people are thinking like, Uber, that's completely irrelevant. What's Uber got to do with Deliveroo? They're two different companies. But while that may be true, they both occupy the same space. They both have, they're both competitors when you can consider Uber Eats. And the most notable comparison is the way they treat their employees. So again, I'm not going to explain anything really at length here. There are several, I'm going to tag like articles down below in the description below if you want to like read more about it. But fundamentally, Uber and Deliveroo and a lot of other companies have been facing these issues where they have a freelance type of model. So they employ people as what they call freelancers. You download the Deliveroo app or the Uber app as an employee. And then you log in when you want to work. They send you shifts or whatever, not shifts, they send you like clients, pick up this person, pick up this food, whatever. You do that and then you log out and that's kind of your shift done. But it's not shift work. You're not an employee. You don't get pension or sick pay or minimum wage. It's just like you do the job when it comes up and then you don't do your job, but there's no jobs coming up, you're a freelancer. They're outsourcing their work through you. And that's been a source of contention for a very long time. London have consistently looked at Uber and said, "No, we're taking your license away because you're not paying your employees right, not treating them right." And it's a very interesting scene going on now. I think recently, again, I'm going to put links in the description below, but recently Uber ended up losing their case in London. I think even in the entire UK, I believe. I've got to double check that article, where these employees are now supposed to be treated as employees. They're supposed to get minimum wage from now on. They're supposed to get pension and stuff from now on. They have to be treated the same way McDonald's will treat their staff, or like Goldman Sachs will treat their staff, and literally any company that has employees. They have these employer rights that they never really got from these companies before, because they were seen as freelancers or like part-time workers or whatever, 0-hour contracts, all this nonsense. But now it's a lot more official, and it isn't a lot more official, I guess, for Uber. They kind of set a precedent saying that, look, you have to treat these guys right now. But Deliveroo are still in the middle of that. They haven't actually agreed to anything yet. They haven't even been taken to court properly for anything yet, as far as I'm aware. And I know that's literally the same model. So I can't see how they're going to get away with that. I strongly think there's going to be a big push this year and next year to sort that out. But yeah, that's one reason. But there are a plethora of reasons I want to explain now as well at length that I've looked into in the last couple of days since seeing what happened. And yeah, let's react. So let me just, I guess, highlight a bunch of other things that I recognized that I saw are issues with Deliveroo stock, and another reason why I didn't buy into it. One massive thing that I didn't talk about a second ago was 2020, and 2020 means a lot of different things to a lot of different people. But what does it mean for Deliveroo? Everyone was in lockdown, everyone was inside, everyone's ordering food. It was their biggest year for growth ever. And those numbers, one, aren't sustainable, and two, were still negative. They didn't return a profit in 2020, in their biggest year, the biggest ever opportunity. They didn't return any profit. They were still in negatives, and that growth is not sustainable. That's driven by the fact that we were in lockdown. There's no reason to believe that that's going to continue in 2021, 2022, and in the future. If you're trying to invest in a company, you're usually trying to invest with like 5 to 10 year horizons, if not longer. We can't guarantee there's going to be another year like last year again, and despite last year, you're still in negatives. Like that's quite a big deal. I think a lot of these startups, a lot of these upcoming companies, these tech-focused companies, are struggling at the moment to find the profitability. On some companies, like for example Tesla, obviously they've had a bunch of positive quarters recently, but their problem was that they were putting a lot of money into research and development, or they were prepared to take a loss in the short term, knowing that in the long term it will pay off because they're reinvesting in themselves. Deliveroo, on the other hand, yes, they are also reinvesting in themselves, but a lot of their reinvestment, if you look at the financials, are marketing. It's not so much R&D, because there's nothing really they can develop at Deliveroo, maybe a better app, but they operate a lot more as a middleman. So most of if you think about their supply chain, where do they lose money? It will be paying their staff, maybe refunding food orders if people say it never came or whatever, if it came late. They don't actually have, as far as I can tell, I haven't looked into the financials in depth. I don't really believe most of these companies that are private, that have plans to go public, they release their prospectus, their deck, and most of these decks are literally, well, not even most of them, all of them are sales pitches. They're not actually to be taken seriously. To some degree they are, but obviously if they're private and they're trying to go public and trying to get people to buy into the share, they're not going to tell you the bad things. They're going to say, oh, we expect 100% growth, revenue's looking good, profits looking good. They're not going to tell you the objective truth, because they don't have to because they're a private company. They can afford to leave a few things out, or maybe exaggerate some of their projections, and I never really take them too seriously. Maybe I'm wrong here. Again, I'm not a financial advisor, but from my perspectives, from all the ones that I've read in the past, they always seem overly optimistic. 23andMe, the chromosomes, what are they called? I think it is chromosomes. So that DNA, you send them like your DNA through like spit or whatever, then they tell you if you're going to be diabetic or whatever. I think it's called 23andMe. They released a deck recently about theirs, and they're saying, yeah, we expect all this growth, all this or that, and I'm like, where are these numbers coming from? You're kind of just pulling them out of nowhere. Maybe that's down to me not doing enough fundamental analysis, or maybe there is an objective consensus here that these decks are the sales pitches. But Deliveroo's deck, they didn't even talk about Deliveroo. They didn't even talk about Uber Eats. They didn't talk about Just Eat. They didn't talk about competitors very much. They talked about growth in long-term projections, but all of the numbers seem to be based on 2020 was great, so this is what we expect moving forward. But as I just said, 2020 was an anomalous year where it's not going to have those same conditions, ideally ever again in my lifetime, but you never know. And yeah, that for me was another massive. I'm looking at that and I'm like, how can you not include? Surely you got to look at your competitors in these decks so people know. People know where these numbers are coming from. You can't just say growth. Yeah, growth, growth, and expect me to want to buy into it. Like, I'm not surprised it dipped 30% immediately on IPO day. One thing that I think is crazy about Deliveroo, I don't actually know if this means anything for from to the investors who are currently invested in Deliveroo, but Uber Eats are the same. And I think one thing that whenever you go to their apps, you always see on Deliveroo, Nando's, on Uber Eats, McDonald's, and the fact that they're so heavily invested in these one brands, it's like if McDonald's would say, you know what, we're gonna make our own delivery service, but don't worry about us, Uber Eats, sorry. I wonder what impact that will have on their sales and their customer engagement and stuff. I don't know. I didn't read into it that much. I read into it enough to know that I don't want to invest in Deliveroo, but I haven't got like an objective, complete consensus of like massive analysis. But I feel like their overcommitment on one brand is potentially a cause of concern because, as I said, if Nando's as well decide, you know what, we're going to go on this app instead, or we're going to do this, that could be a massive hit to their, again, I don't know the numbers specifically, but that could be a big hit. Whenever I use Deliveroo, I only really use it for like 2 or 3 restaurants that I know I'm going to get from. I don't order too much, so it's not like I'm not the prime demographic. But I feel like Just Eat, the fact that they don't talk specifically about any one brand, it makes me a lot more likely to scroll and to find more meals, more places I'm going to like. Whereas if I go into Deliveroo, they have like Nando's, and then it's like KFC, and then it's like another big one. Groceries now, free delivery, whatever. And that just makes me want to pick those ones, which suggests could potentially be an over-reliance on certain brands for these, Deliveroo and Uber Eats apps. I don't know. Again, I'm not gonna. This isn't the fact. Maybe if you want to invest yourself, do some research into it. Think about that one yourself. There's something that I noticed that I think I should mention as well in this video. Seeing all of their initial, the big time investors sell out, jump ship, was kind of a worry to me. Like Amazon sold a massive stake in Deliveroo. All these companies sold massive stakes. All the early investors sold out quite quickly. Which is one thing that kind of not triggered me, but it kind of took my eye. But what fully made me realize that maybe something wasn't quite right here wasn't just that the big guy sold out, but it's also that they made a massive push to retail investors. I've never seen that before. Now, granted, I'm only 22 years old. I haven't lived through billions of IPOs to study how they work out. But usually, at least from my perspective, when I've seen IPOs in the last couple of years, it's been like, they sell it directly to the people involved in IPO. I can't remember what they're called, but it's like people directly involved. And then within 3 to 4 days, maybe even a week, then it becomes properly public on the open stock market for people to trade as usual. Cloud, was it not? It wasn't Cloud. I always forget the name. It's like a cloud tech company. I can't remember what they're called, but they had a massive IPO last year, the biggest ever, I think, in tech at the time. And that was quite similar. I tried to buy into it on the day and I couldn't do it because you had to wait a few days for it to mature, I guess, on the stock market. Deliveroo sent emails out to every single one of their every single person that's used Deliveroo in the past with any email address. They sent them an email saying, "Oh, we're IPOing next week. Buy up to $1,000 worth of stocks right now if you want." And it's like, why? Why do you need to push your stock? I mean, obviously you're trying to make as much money as possible, so you're going to do that. You're going to try and sell yourself as a sales pitch. I get it, but at the same time, it's like contacting every single person that yes, buy us. I mean, I'm 22. I do invest myself, but a lot of my friends don't invest. Why are you telling random people to IPO Deliveroo, buy stocks as a retail investor? That's a very aggressive retail pitch that to me raise alarm bells. I don't actually know what it means. Again, I'm by no means like a veteran investor. I don't know the innings and outings, how these things work, but it seemed off. Something kind of seemed off when they're emailing me telling me to buy their stocks. I'm good. I'm good. Deliveroo is okay. Just send me some McDonald's or whatever. Don't worry about stocks. That's not for you. That's not for you. And yeah, fundamentally, I know I've just been talking smack. I don't really know what I'm saying. And I'm trying to make that obvious to everyone listening. I'm not a proper financial investor. But there's so many alarm bells with Deliveroo, I think that's the vast majority of the points that I could think of when I was looking at it. It has only been 2 or 3 days. I haven't really properly looked into long-term projections yet based on these last 2 days. I know they've got I don't think it's a lawsuit, but they're trying to cancel, reject paying the banks, it's like 18 million or something. Because when you IPO, basically, some auditors or some some people from the finance industry will come and look at your company and value the company, and then let's say they value your company at £1 billion, and you're issuing out 1 billion stocks, 1 billion shares. That means every share is of course going to be worth £1 each. You know, number of stocks versus times the value equals the company's total value. So they obviously valued Deliveroo at a certain amount, and then because the stock dropped immediately, like surely you'd think there's room for Deliveroo to say, look, you priced us wrong, you overvalued our company just to get a higher, to charge us more money. So they're trying to fight their way out of that. Of course, you're going to do that. I don't know if that speaks volumes necessarily for the bank, that the firm that valued them, or for Deliveroo just being like overly aggressive and wrong here. But either way, like there's a lot of stuff going on, and I want to see how this like matures over time before I make. Actually, I probably won't make another video on this. I don't think it's that interesting, but there's obviously a lot more going on. So don't be surprised if everything that I say here is completely wrong in like 2 days' time, because that's kind of the nature of this game. But yeah, very, very interesting. I think the last thing that I do want to mention is, again, I don't know the overall impact this has, but you can tell it's a super, super, super competitive space, because they always have, always have vouchers, discounts, promotions, new this, new that, and that shows how quickly, how rapidly they're trying to attract customers. I think in a space where people pick and choose who they want to order from depending on the day, there's no real brand loyalty. Combining that with the vouchers, that shows how, I don't know the correct technical word for it, I guess, but it shows us there's obviously some level of like scarcity in this sector. I think Deliveroo kind of know that things aren't all right yet. There still is a push to figure things out to get that market share, because as I said, there's no brand loyalty. I might order from Deliveroo today and Uber Eats tomorrow. I don't care. I don't think anyone else cares. And the fact that they also have these promotions to try and continually keep people coming in goes to show that there's obviously something not perfect in that system, that they're going to continue fighting for. It is quite a niche, but also an interesting space, because you're starting to see companies like Zap, Gorillas, I forgot what the other one's called, but all these different like grocery delivery companies coming out now, like 15-minute delivery, and all these different delivery services that are offering different things and different timings and different reliability scores and blah blah blah. Like, it's a very interesting space. But looking at the way Uber has been treated with this whole employee thing, looking at the 30% dip that Deliveroo saw in one day, and how little profits all these guys are bringing in, I don't know what to think anymore. It's not a sector that I want to invest in. It is kind of like tech. So when I look at these companies, I look at other tech companies as well, and I'm not looking at Deliveroo as at the pinnacle of tech. I'm much rather put my money into Tesla, Microsoft, Apple, or the big tech firms, I guess, that are more popular, more stable, less likely to be caught up in a massive lawsuit. Like maybe Google could probably be caught up in a massive lawsuit, but all the other ones are somewhat safer, at least I think. And I guess that's something that you're going to see a lot more of in the coming years, of the ESG focus becoming more and more prominent. How are these companies being governed? Are they likely to get big fines? Do we really want to invest in companies that are going to continually pay massive fines? Like, I know Italy have some sort of lawsuit with Deliveroo right now. And it's like £700 million or €700 million, I guess, almost $1 billion. I don't think investors are looking at that with a positive light, like, yeah, go Italy, we can't wait to pay you all of our money. So it is interesting. I think at this point, I don't really have much to add other than like subjective opinion based stuff, which I don't really see the point in disclosing, because I'm not, as I said, I don't understand the field as much as other people might. But yeah, I don't know. That's Deliveroo in a nutshell. I think a final thing that I need to clarify is Italy aren't literally suing Deliveroo. It's not literally Deliveroo that have to pay out €700 million. I'll put the link in the description below anyway. But they are targeting like a plethora of food delivery services in Italy, and it is a massive lawsuit. I don't actually know the specifics of what's going on, but I will put a link down below if you want to read into it yourself. But what I'm trying to say with that point is that the whole sector is very, very challenging right now. And as an investor, as someone myself, I'm not earning any money. I'm still a student. I don't have a lot of capital to risk losing for a sustained period of time. Looking at these companies, Deliveroo, DoorDash, Delivery Hero, whatever, Uber Eats, it doesn't make a ton of sense to invest in them right now, because there's so much uncertainty in that area. And as I said, when you have these companies that are not making the best decisions with their employees, leaving the door open for lawsuits and complaints and negative. It looks bad in the brand image, reputation. Not to mention they already have very, very low profit margins, and a lot of them are failing to make a profit. A lot of them are in the red. It's like if Deliveroo were told tomorrow, one, you got to pay out 100 million to whatever lawsuit, and then two, you got to start paying your employees properly in healthcare and this and pensions. I can only see that razor thin profit margin going to like ridiculously low levels. So yeah, that's just me. That's just me. Again, that's basically what I've got to say. I was planning to put out an internship game video today, well, tomorrow. So that will come next week instead. Maybe on Wednesday, actually. I'll see. But this is potentially, hopefully, the last time I talk about Deliveroo and any London-based, London Stock Exchange company. The UK investing scene is so dead, in my opinion, at least. I don't really see much going on here. I do want to talk about it more, but at the same time, there's just nothing that I want to talk about. Deliveroo was like an olive branch that I couldn't resist snapping at today. But I don't know. Hopefully, we get some more LSE news, London Stock Exchange news. But yeah, otherwise, internship game next week, and then back to the normal schedule immediately after that as well. So thanks for watching, guys. I hope you enjoyed it. Don't forget to like if you enjoyed, share, comment, subscribe, all of the, the YouTuber, influencer, actionable causes or whatever. I'm going to put these sunglasses back on. Look at that. Look at this. Look outside. This is the UK, baby. We're going out, yeah? Let's get it. See you guys next week. Going out, boy!